The two basic entities in most all economic systems are the household and the firms. Household on the left, firms on the right in this presentation. The firms on the right are where production occurs. Production is the transformation process in which productive resources from the households are converted into goods and services. Note that the firm buys resources from the household and in turn sells goods and services back to the households. It operates as a seller in the product markets and as a buyer in the productive resource markets. The household performs two basic roles. They sell their resources in the resource markets and use the proceeds called income to buy goods and services in the product markets. Typically, we view this activity taking place between the household sector and the firm through the lens of a capitalistic free market system or a competitive free market capitalistic system. But it can also represent a command economy, such as is found in communist and socialist countries, as well as mixed economies, which fall in the range between capitalistic and socialistic. Frankly, most economies are mixed economies, including the U.S. We will touch upon differences on the differences later, but suffice to say that it has much to do with decision making at the firm as to one, what goods and services are to be produced and how the household is compensated for its productive resources, which include labor, physical capital, entrepreneurship, and land. And two, the household is compensated for the use of those productive resources, or rather how the household is compensated for the use of those productive resources, how and how much, and so on and so forth. In this slide, we want to bring in government into the mix. We typically call these sectors in the economy. We're showing three sectors here: the household sector, the firms or the business sector, and government sector. There's a fourth sector as well, which we will get to a bit later, and that's the foreign sector. So that would be outside of the domestic economy, of course. Again, other forces such as government and world markets, again, imports and exports, are also part of the circular flow. Households on the left sell their productive resources to the firm. These productive resources, or the firm's input mix, are labor, capital, that's physical capital, entrepreneurship, and land. Labor is self-explanatory, but it is important to note that it increasingly embodies human capital, which would include education, training, work experience, etc. And it's not always physical. It can also be, we're focusing on the mental, but again, it could be athletes and so on and so forth. So labor increasingly has become much more capital intensive in terms of developing, human capital. The second component of the productive resource mix is entrepreneurship. Entrepreneurship is critical at the firm because that involves the decision-making component at the firm. Entrepreneurs, when we speak of entrepreneurs at the firm, we're talking about the CEOs, the COOs, the CFOs, the director level decision makers at the firm. And for a small business, it's typically the owner operator that we're talking about. These are the people that make the decisions at the firm as to they determine what the productive resources that are going to be employed coming from the households, the extent of the use of those productive resources. Again, whether we're talking about labor, the entrepreneurship itself, capital, land, etc. And it also involved in this as the entrepreneur is that their role in the firm is transforming, the firm's role is to transform the goods, transform the productive resources from the household into goods and services that are finally sold back again to the household. It's important to note that in a free market system, the entrepreneur function, the decision maker, is controlled again for the most part by the market itself. It's the instantaneous feedback coming from the market, whether or not the entrepreneur is successful in terms of providing the goods and services to the households as they desire, if you will. That is to say that if an entrepreneur is not successful, they are typically fired, or at least have to change their way of doing business. This is a departure from other forms of command economies, so on and so forth, whether you're talking about socialistic or even more so the communist regimes, wherein the entrepreneurs, the decision makers at the firm, are the firms themselves in a communist country are primarily owned and operated by the party itself, and also the directions that are that the entrepreneur takes are coming directly again from that regime, from the command economy. That's the major departure from a command economy versus a capitalistic oriented economy. And so, anyways, onward from entrepreneur. Capital. When we're talking about capital, we're referring to the physical capital employed at the firm. That would take the form of machinery and equipment, robots, the building, and so on and so forth itself as well. Now, underlying that physical capital would be. It's not hard to understand this. It's financial. It's the financial capital, which is also coming directly from the household. So the financial capital is underlying that physical capital, and that's the financial capital would come in the form of ownership from the household side, and the ownership in terms of that financial capital would come in the form of equity capitalist, such as a stockholder in a company, or perhaps the debt owner of the company in terms of a bondholder. So this is the linkage with the capital, the financial capital linkage with the physical capital that goes into the firm. The last component in this input market, productive resources at the firm, would be land. Land would include, of course, land, as you would typically expect, and also mineral resources such as gold, oil, the other components that would go in, coal, etc., that would be going into a firm. So, in exchange for the use or the sale of its productive resources, the household sector receives compensation, which is called the income distribution. So it's flowing back from the firm to the household for the use of the productive resources, whatever those forms might be. And typically, the wages or salary component of the income distribution flowing back to the household comprises about 2/3 of that overall income distribution in the U.S., that is. So the breakout, of course, again, labor would be paid in terms of wages, salary, so on and so forth. The entrepreneur usually wears two hats. One would be the labor component, which would include their salary. So the CEO, of course, would receive a salary, but in addition to that, they would also likely receive profit sharing in the form of like stock options, and that would be linked to their performance. And so that's kind of the portion that separates the entrepreneur from the labor, the entrepreneurial function. Capital, of course, is compensated in the form of, we're talking about financial capital, would be dividends paid to stockholders and interest paid to bondholders. Last would be land, and that's probably the easiest of all of these, and that it would be rent for the land itself, or per unit, per barrel for oil, or gasoline, or whatever the other components are flowing into the firm. It's important to note that in a market-based economy, decisions, again, are made by individuals in terms of being the ultimate deciders in the product markets for goods and services. So these are very individualistic, individual decisions that are made, within the marketplace. The entrepreneur guesses at what the consumer desires, and if they guess incorrectly or too frequently they guess incorrectly, they are usually surreptitiously fired. At any rate, the compensation paid to the household and the compensation paid to the household for the productive resources are dependent upon how useful they are to the firm in making those goods and services. And anyway, meanwhile, in a command economy such as communism, again, the decision maker at the state-owned firm for the goods and services to be provided for the household are determined by the government panels and so on and so forth. And that's extremely inefficient. Um, and we've seen examples of that in the former Soviet Union, where you would have people waiting in line at department stores for anything. They just lined up. It didn't matter what was being sold. They didn't care. It didn't matter if it was anything from toilet paper to uh, any kind of canned goods or anything. They would just line up because it was so difficult to determine what was going to be produced, and was an ongoing problem with the command economy in particular. In addition, so that was so far as the product markets were concerned. So far as the income distribution side, that is also determined by the government rather than by markets clearing themselves and demand for the labor and the other productive resources as well. It's something that's determined more so by government. Um, Members of households need the means to purchase the goods and services they provide. So they acquire the means by offering their land, labor, physical capital to the highest bidder in the market. For example, when you go to work, you're selling your labor in the input market, and as a result, money flows into your household in particular. The derived demand for productive resources at the firm points to its need to buy those necessities for the transformation process in the household. The term derived demand comes from the firm's need to purchase productive resources from the household in response to the demand emanating from the goods and services market for its products. The return flow of income or the income distribution is provided to the households for the use or purchases rather of its productive resources. Again, in a competitive free market economy, the firm pays only the opportunity cost level of compensation for the use of those productive resources from the household. In a less than competitive environment, the owners of those productive resources can receive more than their opportunity cost level of compensation, and that violates equity. Equity, what it boils down to with equity is that equity means that in this case, we're talking about so far as the household providing its productive resources are concerned, equity stipulates that those productive resources receive no more than their opportunity cost level of compensation. So that's what equity really boils down to, is that you're not receiving more than your opportunity cost for whatever you're providing in this case. Okay. And lastly, keep in mind that the productive resources again are labor, entrepreneurship, capital, and land. Now, again, in this slide, firms sell goods and services. Firms sell goods and services in the product market. In their role of decision maker, the entrepreneur decides what goods will be produced and sold and for what price. Depending upon demand for the products offered, the firm receives compensation for those goods and services from the household in their role as a consumer. Now, in this completing this representation of the circular flow of real economic activity, we can see the household in its role as supplier of productive resources and in its role as demander of goods and services. So again, when we consider the two sides of this household coin, we look at it in terms of the income approach, in terms of the income distribution on the bottom portion, and on one side again, in terms of, and on the other side, in terms of the expenditure approach, or the goods and services purchased from the firms on the other. Okay, so this brings it all together. This is where we bring government into the mix, and we also bring in the foreign component, the foreign sector rather. So we have all four components: household, firms, government, and also the foreign sector. In this final slide, then, we have incorporated all of those into our circular flow. There are several points to consider. This is an aside, but it's a very important point. Taxes, whether they fall on the firm or the household, are ultimately borne by the household sector. Repeat that 3 times. Taxes, whether they fall on the firm or the household, are ultimately borne by the household sector. Again, taxes, whether they fall on the firm or they're directly paid by the household, all taxes are ultimately borne by the household sector. Now, bearing in mind that the firm is only the place where productive resources are transformed into goods and services, any taxes thus levied on the business sector are thusly either passed forward to the household in the form of higher prices or backward to the household in the form of reduced income. A case in point is the corporate tax. While the firm pays the tax, whether you're talking about state or federal corporate tax, the burden of that tax falls either on the consumer in the form of higher prices or to the household in the form of reduced income in terms of the income paid for its productive resources that are being employed. So again, the corporate tax is either passed forward to the household in the form of higher prices in terms of its goods and services that it's purchasing, or in terms of reduced wages, if you will, in terms of reduced income going back to the household. It's not just wages. It would also be, of course, the owners would also pay a price for this. They would have reduced dividends or could have reduced dividends, so on and so forth. So taxes are a very important piece of this pie to understand. That they are ultimately, all these taxes, the burden of the taxes ultimately falls on the household. And you could go into other forms, not just corporate tax. It could be something like Social Security, Medicare tax, where half is paid by your employer and half is paid directly by the employee. Now, the employer, if they did not have to pay that portion, they would at least conceivably be able to pay their employee, the additional, that additional portion in wages. Okay, anyway, so secondly, when we consider the government's role in the economy, it should be noted that the household, from an expenditure approach, remember on the top portion in the product market, consumes about 70% of goods and services from the business sector. The balance of that spending is termed non-consumption spending. Included in non-consumption spending is private investment, or GPDI as it's referred to, gross private domestic investment. Government spending comes in 2 stripes: government consumption expenditures and gross investment. Gross investment being long-lived assets such as tanks or aircraft carriers in terms of military or roads and so on and so forth. And finally, it would be exports. In summary, non-consumption spending has the effect of expanding, or exploding is the term that's very often used, and expanding the economy in essence. And they're also more specifically referred to as injections. So we're talking about investment, government expenditures, and exports. Those are adding to the economy or injecting into the economy. On the other side of the equation are withdrawals. Withdrawals, since they're called withdrawals since they have a tendency to slow down or depress the economy. Included in the mix for the withdrawals are taxes, imports, and saving. Bear in mind that taxes in and of themselves certainly do depress or slow down the economy. So again, we're looking at these components discretely, just one. I know that there's always, you say, well, taxes would be funding government expenditures, but we're looking specifically at these components, and taking it apart as such. At any rate, in addition, imports have the same effect because payment for and resulting income derived from those goods and services flow out of the country. Again, with imports are their production outside of the country, meaning the circular flow of, take your pick of China or Germany, for those goods that are being exported to us, which are imports to us, that income is flowing back to their own households in the form of income in terms of wages and profits and so on and so forth, and rent. So that's why imports have even though we're consuming those goods, it has a depressing effect because the productive resource side of it, if you will, the production is occurring outside of the country. Um, and lastly, when we look at saving is obviously not consumption. It's deferred consumption is what it is. And if you're not consuming, then those would be withdrawals, and therefore saving is considered a withdrawal. So in summary, to the extent that households pay taxes, save, or buy imported foreign goods and services, not all of their income is consumed on the goods and services they produce. These non-consumption expenditures are called withdrawals. Also, the firms do not sell all goods they produce to the household. The other sources of demand for the firm's production are called non-consumption spending or injections.